Good afternoon, everybody. This is Sam Allen at Grounded Real Estate, here to give you your monthly market update for the month of October 2021. Yes, I'm still sitting here with a virtual background. It's because the Grounded office is loud right now. There are a lot of new agents and a lot of activity over there. So hopefully we'll have some good news to share about a new office next month. But until then, I will continue to use my home recording studio here. So anyways, let's go ahead and jump into the monthly market update. I'll share my screen. All right, so October 2021. Yes, the year is flying by. What a year it's been. So we'll jump into the median price over the last 20 years. This large nauseating table here shows the last 20 years of median price in Sacramento and West Sacramento. But we will look at the end of the chart here for the most recent numbers. So September of 2021, the median home price was $505,000. That's down slightly from our peak several months ago, $520,000. But it is still up 15.3% over last year at the same time. We were at 438,000 last year. So still a really healthy clip, but coming down off of those huge 20% plus year over year gains that we've been experiencing, which honestly, I'm happy to see because it's just been a little bit too hectic trying to connect buyers and sellers with market movements like that. This is the last 20 plus years presented in a linear form for those of you that are more graphically inclined. I also wanted to show this because it's easier to display market segments. I wanted to it feels like things are shifting a little bit. We've been saying that for a long time, but I wanted to pull up some of these lines here that have shown distinct market shifts. We had that first really run up in the early 2000s, then the crash, really about late 2006 until 2009. Then things are really flat for the next several years through about 2013. And then we've had this really nice gradual rhythmic growth here for the last decade, really. And now we really had a large jump over this last year. And so it feels like just another market movement. I'm not saying it's good, bad, or whatever. It just feels like maybe the market's fundamentally changed a little bit. So I'll get rid of all that old information, focus on the last 8 years or so of information here. And so again, as you can see, we've got that really nice, just smooth, steady increase. But we did have this big departure here that started about January of this last year, where we would have normally seen a market dip, a seasonal dip, but we held strong there. And then it really took off through June, July of this last year. So again, I don't know what the market's going to do. I just wanted to point that out. It could, maybe things do mellow out. And as time goes on and we meet somewhere around this 470, 480, 450 price point, maybe things come down 10%. I don't know. Your guess is as good as mine. Maybe things take off. Maybe things this is a new norm and we follow the same trajectory, but we just had this one big blip. And now we continue the same growth that we've seen over the last decade. I don't know. I'd love to hear your thoughts on what the market may be doing. Just again, wanted to call out that departure from our steady increase of the last 10 years. There's still a ton of home buyers out there applying for mortgages. So there's certainly not a lack of demand. There currently is, though, a lack of supply. We're still at 1 month's worth of inventory, which, a normal market for us here in Sacramento is about 2 months of inventory. Really, we haven't seen 2 months of inventory since 2014. But one month of inventory is pretty low historically there. So it's not like we have a glut of homes on the market right now. So supply is still really tight. Demand is still really high. Fundamental economics there would tell us that prices would increase. Something that really affects buying power is mortgage rates. This is the last 40 years of mortgage rates here. So you can see we are historically low. However, we do have a little bit of an uptick that's happened since about July, August of this year. Nothing to raise alarm bells over, but we're still right there around the 3% for a 30-year fixed. So great rates historically, seeing a little bit of a jump. Why is this? The Fed has talked about moving rates up, but the Fed's rates they're not tied to mortgages. Really, the mortgage is more closely related to the 10-year treasury note, and also inflation. There's a lot of factors that go into what mortgage rates do. Fed rates do have some effect on it, but it's not a direct correlation. Really, what you want to keep an eye on is inflation. But the powers that be say that the Fed's going to, well, the powers that be being the Fed have themselves said they're going to raise rates within the next year. So final thoughts, the median price movement this last year saw the greatest increase from January through through June. So will that happen again this winter? I don't know. Are we going to hold our pricing and then have another crazy spring? I don't see a lot of inventory come on the market, so maybe, but I also see a lot of burned out buyers out there. So maybe not. You tell me. Are we entering a new market segment? Anecdotally, it just feels different. I can't really put my finger on exactly what, but there are those burned out buyers out there. And honestly, there's burned out sellers out there. There's a lot of people that want to sell, but they know they're going to buy into a higher market. And with that tight inventory, it's a lot to go through to try to sell and buy. It's definitely doable. We're actually in escrow on one right now, but it just feels like people are a little bit threadbare right now. They're getting worn out. I do not have a crystal ball. I do not know. I like to raise some of these questions because I really want to hear from you guys. It really helps the rest of the Grounded crew figure out exactly what's going on. So I'd love to hear from you what you're seeing out there. Inventory is still really tight. Like we said, the fundamentals are still there. Really high demand, really low supply. Interest rates will rise according to the powers that be, but again, it doesn't directly drive mortgage rates. So keep an eye on the interest rates, but also keep an eye really, I think more on inflation is maybe a better indicator of what might happen with mortgage rates. And I'd love to hear what, in your mind's eye, what could a fundamental reason be for this market to turn, for it to turn up, for it to turn down? I would love to see some comments and discussion around this. So I've kind of offered you some of my insight. I don't have that crystal ball, so I would love to hear some more of your insight. So that's all I got for this month. Thank you for taking a couple minutes to watch this video, and we'll come back at you next month with another one. All right, till then, take care. Bye.